Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we are now on September 8th. It's hard to believe I'm saying September 8th, 2020, getting on, 5:25 in the afternoon. So it's nice to be back. I took several days for myself, and the one thing I did this time, and I don't do it all the time, I really took, as it turned out, Wednesday, Thursday, and Friday, and didn't look at the markets. I watched stupid TV. I enjoyed myself. I did a lot of handy things that I wanted to do. Enjoyed it and didn't pay attention. And that's how you've got to wash your mind out every now and then. If you start peeking, oh, look at the markets, look what they're doing. That's not a vacation. You've got to get away from it. So while I was gone and come back last night, I started putting out and getting my numbers ready for the recordings today. I'm looking at the markets and going, finally people decided things got a bit too high in price. I mean, be it Tesla, be it Apple, it didn't matter. Anything these companies did, the market was running to higher prices. August was the most unusual trading month, the strongest one for stock indices I have ever seen. Just an unbelievable month, and all parties come to an end, and that party's ended for the moment. If we take a look at the marketplace, you can see you're down for the week so far, just over 3% in the S&P. Okay. You can see how the market has declined from that high, and if we look at this decline, here's that high. This week you were down 2.48. This week you're down, 3.05 right now? So you're down 5% from a high on a closing basis. It's not a big break. That's the point that I'm trying to make. When we take a look at what the chart action is doing on the daily chart, whole different world. Because you were down today 2.4%, day before 1.27, so that's 3.5 roughly. The day before you were down in the market another 3.2, so we're going to call it nearly 7%, round figures. Day before that you were up, and tonight you're down a fraction. So 7% decline, okay. On the futures, nothing that I see major there. When I look at the chart action, you broke the trend. Where? Right here this day. You had lost the pattern of higher lows, higher highs. So the swing line pattern was broken. Then the market let go to the downside. Where was the 18-day average? Well, it was here these 2 days. You fell right to it on the first day of the break. Remember, I call that the line in the sand. That's often where a market, after it's up, goes back to try to figure out what it's going to do next. This was Thursday the 3rd. Friday, the market sank back, and then late in the day, it came back up towards that number. So now we go to today. And today, the market lets go and goes right through Friday's lows. And now you're going through Tuesday's lows, an early trade tonight. Where's the Bollinger Band? Ta-da, it's right here. So what do I think? I think the pros are coming out right here. I think those that are short, and I don't know how they got short, I don't know their systems, don't have to. On the way down, the first challenge of a Bollinger Band, what do I say here consistently? That's where I think the smart money is coming out of the market right now. So you can do what you want, but that's the zone that I think they're looking at right here. As we take a look at momentum, you're oversold. So you've got an oversold market knocking on the door of the Bollinger Band bottom. You might hit that number exactly. You're about 4 points away, but they start coming out against it, and that's the point that I'm making. And resistance back up at the 18-day average. Do I think the pros are going to sell the market? No. You're too oversold. I think this was one of these vertical price drops that came out of left field. You don't see them coming. They're violent when they come, and it could be that the market tries to get its legs right there. What do I think of the NASDAQ? Why would it be any different? Let me get to this for you in the NASDAQ. If it drops, I'm looking for 10,837, let's call it in round numbers. Resistance back here. Again, oversold. So I don't see the pros selling the rally, but I have reasons for them that I can argue that they're going to cover shorts if they can get it down to that lower band. The Dow, right here, right now. This is where I think the smart money, calling it a game. The easy money's off the table. Doesn't mean you can't drop more, but if you go back the first time you hit a Bollinger Band on the upside or downside, and you just look at it, you don't need the high, but you'll be in a zone. a good zone. Well, you've just come down rather dramatically. I can see them doing that. The Russell, now you're under the Bollinger Band. This is a different chart picture. This is a market that was developing what we call a short pipe. Pipe happens when the Bollinger Bands narrow in, and they narrow in rather dramatically, and the market starts going sideways. You can also see that sideways pattern right here. We then look at the market, and the next day, and this was September 3rd, you're still in it. Now, which way does it go? It can stay in there and just churn you. It's a very difficult pattern to trade. You've also got a higher high, lower low. Now the market's letting go. So if it continues to let go, what's the next support? You figure that you only stay out of that Bollinger Band 5%, but what if you make a run? Then the 200-day average is your next big support, the moving average there. And that's what this market seems to be hanging on. It looks to me like it wants to find its legs in between the Bollinger Band and the 200-day moving average. In the VIX, come on, load up. I don't know why it's not there. There you go. I'm not impressed in any manner. This is all you can do when you just gave me a 7-8% drop in stock indices. Where did you stop? Again, look for these major moving averages right there. In between the Bollinger Band and that number proved too much. No different than I'm pointing out to you in these stock indices. I'm certainly not bearish. I can see momentum's correcting. Market wants to break more. Support's back here. Are the pros going to be a buyer? Well, none of the numbers are over 70. So I do think they're looking for reasons to go long, not short. What about T-bonds? Well, first of all, we got to start thinking about the Decembers. I noticed just a moment ago I was looking at the quote system, and I didn't even have quotes. In fact, they're still not here for the Wednesday session. Don't know why. I think we should be moving to the Ds. The day volume is still September, but it appears that the systems are paying more attention to Ds. Look for resistance right in these numbers here at the 18-day average in the bonds, in the 10-year note. This has a quote. It finally came in on this one. And I'm going to look for the upper Bollinger Band again. What is the trend? Up. You have higher lows, higher highs. Be wary of this band, this sideways action. Don't look for the market to pick up and run. If it does, great. But playing for it, very different. Is the long side still the place to be? It certainly looks like it. You'd have to take out, to break the bullish pattern on the chart of higher lows, higher highs, 139.06. Doesn't mean it can't be taken out. And if the market rallies, I look for the Bollinger Band to be the resistance, 139.28, and I would expect the pros take some money off there. Dollar index. This isn't open yet, so that one I know. Overbought. You went right up to the Bollinger Band top. You've made a high today of 93.52. That Bollinger top 51.5. You know what I'm going to say. I think the smart money out today of that market. Eurocurrency, flip-flop. Fall into the lower Bollinger Band. What do you do when you do that? I think you walk away from the market. It's really simple. What do you also have this week? On Thursday, you have the European Central Bank meeting. So you want to be a hero in front of that? I think the smart money's going to go sideways here, let the bank come out with their statement, and it'll be like the beginning of a season. They'll just kick it off, and away we're going to go. I don't expect the bank's going to do a lot new, but they have a real problem that inflation is going the complete wrong way in the Eurozone. It keeps dropping, and it doesn't help them that the euro just got up into the 120s. Now, it has had a nice setback from there of 2.5 cents, but can they keep it from doing anything but this sideways action? I don't know. In the Japanese yen, the market is trying, the word is trying for an uptrend. Higher lows, higher highs. As long as prices are hanging here, I think the pros are buying right in this 94.34.5 area, probably a straight stop under 93.85. Market's not acting like there's anything wrong with the stock market break. You're not seeing big bids come into it as safe haven bids. Bitcoin fell out of bed. Now, I was gone. Higher lows, higher highs, outside day up. What number don't you want to take out when you get an outside day? On an outside day, you don't want to see, when it's an outside day up, the low of that day taken out within the next 2 trading sessions. My own rule, nobody else's, I made this one up, is if that's taken out, the odds strongly favor you're going to make a run for the lower Bollinger Band, or the closest moving average. This is the closest number. The other averages are under us. It's exactly what occurred. This is the gravy you get from that. Now the market's at a combination of the Bollinger Band and the 100-day average. We just talked about that, saying, you know, that should be a zone that the market tries to find its support. But this market has fallen dramatically. It's getting a lot of press off of this break as well. Fascinating. Here's your difference between well, actually, I don't know if this is any good, because I think I've got to move to the Novembers. I'm not going to cover this. I didn't even look at that. That's off the board. I'll do the Novembers for you. I didn't update that chart. You go away and you don't even look at differential charts. I saw it right there. Okay. When I was leaving, I said, and I had been saying this for 3 weeks, you've got yourself a pipe. Is it going to be a top or a bottom? It's a top. Here's the market starting to break out on September 2nd. But we've done that before. We've gotten over it. Didn't do anything. 2 days in a row. Still not oversold. Interesting market. Don't know what it's going to do. Now the market's picking up momentum. So now, for the first time, had I been here on Friday, I'd have said, it's got all the makings of a market that wants to pick up momentum to the downside. The next support level, folks, could be that, and I would have used the word could be the 100-day moving average of closes. Wow. That's what you've done. Until you clear this area again, the pros will be looking at this drop, and it's been a trend to the downside as well, is saying, okay, a top is in place, now what's next? Well, you know, you're going to hear things. Didn't help that the Saudis cut oil prices over the weekend. It didn't help that when you looked at Chinese buying, it was down 7.5% of crude oil from the OPEC nations from the prior month. So demand slipping away, price a bit too high, market in a bit of a correction. WTI, you are not going to leave this out of the picture. Break out to the downside as well. If they're going, where's this market going? And we just finished our big driving holiday. We're done. Next driving holiday, if you call it that, it's going to be Thanksgiving, I guess, as people go visit the families. But, you know, that's winter time in some areas. You do realize, I don't know if you saw the weather temperature in Denver. It was 90 yesterday. Today it's in the 30s. That's dramatic, and there's snow falling in a lot of areas. Weather is wild. Lower highs, lower lows. If it keeps dropping, look for the 100-day average of close. But you're in that zone right now where the market's probably going to find some legs under it. No reason to be bullish. That's not what I'm saying. I can see short covering and selling on rallies once you determine, are you going to embed or are you going to correct that oversold condition? Nat gas, we're getting to that funny time for nat gas. You don't need it for heat. You don't need it for air conditioning in much of the country. So demand starts slipping. Momentum, you lost your embedded reading. The market went right to the 18-day average of closes. What else? I think I can come back here and prove a point. Take a look at this day. You got an outside day up. If you take out the low of an outside day within the next 2 trading sessions, my rule that I use is I'm analyzing charts and so on. If that's taken out, I'm looking quickly for the 18-day average, wherever it's at. Bingo. You didn't change the trend yet, but you're not, right now the bias is down, momentum is down, and while the swing line up, it's only 1 out of 3 things to be bullish. That's not enough reason for me. You know, if you're like me, and I hope you missed me when I was gone, you look forward to that morning subscriber video that I do. At 5:30 in the morning to 5:40, I start recording for you and discuss the futures markets in detail. I'm going to review 40 charts for you. I'm going to go through them with the analysis. First, I'll start you off in the morning with what the fundamentals are. We'll cover Asia. We're going to cover Europe, right back to us. And I make it right on screen. You see the headline news as to what they are. Then we're going to start going into the chart action and try to come up with buy here, sell there ideas for you. Where we right, where we wrong, and we being I'm putting out the trade. Do you want to take a look at that? That's what the we is of this. But let's assume that you've already got your trade idea in some of these areas, and you say to yourself, I wish I could talk to somebody and get their opinion of what this trade looks like for me. Should I get in or not get in? That's the guy I want to be for you. I'm going to review the chart. You can play it back and forth again and again. Don't log out of the video. That's the key. Keep the video there and you can play it as you want. How do you get this? Go to our website under the word research. For the price, slightly more than a price of Starbucks. 1 cup, $7.95. I just bought a big drink, so I know the price. I'm right there. And I looked at it and I said, you're getting 30 days worth of this data and you're done, like me, I was done with my Starbucks in 15 minutes. And you've got 30 days of this. Decide if you like it. We also have a Spider ETF video that we put into a combo package for some of you. You might want that. With all this, I'm Ira Epstein. Good to be back. I'll see you tomorrow.